Tesla stock is going to $250 per share, says Gary Black. He just updated his catalyst list. I'll go through that. And in terms of my expectations personally, I think I need to give a bit of a warning to all Tesla stock investors so that expectations stay realistic for the next few months. I think the sort of big thing to look for in the short term that's putting pressure on Tesla stock is how many deliveries will we have for Q1. Tesla delivered 420,000 cars a year ago, and Tesla may not deliver that many this quarter. If Tesla delivers less vehicles this quarter than a year ago, then there is going to be some pressure on Tesla stock, unless we have other good news. And the analyst consensus still is much higher than what I think Tesla is going to deliver. This number is from March 5th, but the last number that I saw from about 4 or 5 days ago was, I personally think, way too high. However, if Cybertruck production continues to go really well, this could offset the bad news because Cybertruck is going to be a pretty profitable vehicle and there's a lot of demand for it. And it's also not helping that a senator is calling for an investigation into Elon Musk and specifically Tesla as well as X. And sure, you can say that she's wrong to do this, but she has power, and I think something is going to come from this. Also, until the next generation vehicle comes out, I'm not expecting much growth for Tesla's deliveries. Currently, Tesla's price to earnings ratio is roughly at 40. Now, if Tesla's stock suddenly drops to 100, or let's say it drops by 50%, its PE ratio would be at a crazy 20 roughly. In my personal opinion, that would be an insane deal because even if the auto business, let's say, temporarily does not grow, you will still have growth in the energy business. And the progress that Tesla is making with FSD currently is mind-blowing. We know that for the first time, Tesla is no longer AI training compute constrained, which is a huge deal. So let's say even if Tesla stock drops from here on, there's no way I want to be out of this stock because things could turn around extremely quickly. Meaning, even if I was 99% certain that Tesla stock is about to drop 50%, would I sell my Tesla stock in the hopes to buy more shares at a cheaper price? I'm definitely not saying that Tesla is on the verge of solving FSD in the next few months or anything like that, but I am saying there's a possibility, and if that happens, Tesla stock, in my opinion, will rally, doubling the stock, tripling the stock, perhaps quadrupling the stock extremely quickly. For a company with no earnings growth, a PE of 40 would be a bad PE. But Tesla still has insane growth ahead of it. First of all, the EV adoption is still happening. Gary estimates that is happening at about 20 to 25% per year. Also, Tesla is seemingly switching its strategy. We know that Tesla just cut the production in China by a little bit. Well, it's not a fact, but it's extremely likely that that happened, which is a signal that Tesla's gross margin has perhaps bottomed because Tesla is actually increasing the prices, no longer decreasing them. And if you have been a subscriber for a long time, you know that I generated millions advertising. And if Tesla deploys very effective advertising campaigns, I think the demand would come back really strong. Tesla is obviously advertising to some extent, but we don't know exactly how much money has Tesla spent. Someone told me, oh, well, look at how many ads Tesla has on Google. It's hundreds of ads. It means that Tesla is spending a lot of money. But I have ran campaigns, for example, for $1,000. And in that one campaign, I might have had 100 ads because I was trying to figure out which ad works really well. So the number of ads to me is completely irrelevant. I want to know exactly how much Tesla is spending, and my guess is Tesla has not spent much money yet. And if all of a sudden Tesla, let's say, decides to spend $1 billion on advertising, and if it does it right in a very creative way, I think it would be a huge catalyst for Tesla stock. With price cuts, Tesla has killed quite a bit of competition already. So I don't see much of a problem with Tesla not cutting the price anymore, but I would also be for the strategy to even further cut the price, let the competition suffer even more for some extended period of time. It would definitely hurt the stock though. Perhaps even monumentally in the short term, because the margins would erode, but it would hurt the competition even more. And then after that, we can increase the prices with a lot of advertising at the same time. So at this point, I'm okay with both strategies. I think both can work. But it looks like Tesla is saying that, okay, maybe enough price cuts. Now we have reached gross margins that we are perhaps relatively happy with, and we don't want to go much lower than that. Now we are going to try to increase profitability and maybe advertise. Although I remember from one of the analyst notes that the Tesla team in Austin said they were not committed to saying that the auto gross margins have bottomed. They left that door open for more price cuts. Anyway, the number 2 on the list of Gary's Tesla stock catalyst is the Cybertruck halo effect, and with more production happening right now, that effect is going to get bigger. And to me personally, this would be a pretty big catalyst. I'm not expecting the market to actually take it as a big catalyst. I think the market maybe would say, oh, okay, that's a good thing that Elon Musk is getting a new compensation plan, because it signals commitment and it signals that he is incentivized to focus on Tesla a lot. And one thing that I would be pretty happy with if they put in the compensation plan would be something related to AI. For example, could Tesla have a piece of XAI? But if you follow Elon on X, you notice that Elon has been posting about Tesla quite a bit more, even trivial things he has been posting about Tesla. And I think that has to do with the compensation plan being something that he is probably satisfied with. Maybe it's not complete yet, maybe it's not ratified, maybe it just in the early stages, but it would seem to me, and this could be wrong, but it would seem to me that Elon is happy with where it is going. Number 5 on Gary's list is Fed cutting interest rates sometime later this year. It's very likely to happen. And FSD take rate, in my opinion, is almost certainly going to increase once FSD 12 goes to a wide release. At least based on all the videos that I have seen, it's definitely quite better. I have not heard a single person say that V12 is not a major improvement compared to V11. They all have said it's much better. And we know that when Wall Street sees more revenues coming in, Wall Street all of a sudden gets quite a bit more bullish. And if we see licensing deals, the rally that we have seen about 9 months ago with Tesla making deals with legacy automakers who wanted to access Tesla's charging network, who adopted Tesla's NACS, I think that rally will pale in comparison to the rally that's coming once automakers are going to start licensing Tesla's FSD. And I mean, the stock rallied really hard. It went almost to $300 from under 200. Number 7, the next generation vehicle launching in 2026. Now, it appears to me that Elon Musk has been sandbagging lately, and he didn't sound very bullish with the next generation vehicle, but with him sandbagging on a few things like the Tesla AI training compute, it's a possibility, and I'm not saying it's a likely possibility, but it's a possibility that Elon has been sandbagging on the next generation vehicle too. And number 8, Optimus beginning production in 2026, which is certainly possible. If you saw yesterday's video, you know that Tesla is trying to test the Tesla bots in multiple factories all at once. Gary also has some negative catalysts. Number 1 is Q1 and 2024 deliveries estimates being too high. I agree with that one. Number 2, the price war in China. Some of these companies are going to get slaughtered right now. I think is the bloodiest time, because you have companies that still have cash and they're not making money, and some of them will never make money, but they still exist and they are producing and dumping these EVs on the market, which is pushing the prices lower. Number 3, Model Y inventories being too high. Number 4, year-over-year auto revenue growth now declining. Number 5, PE re-rating risk with negative growth. And number 6, Trump presidency would be a negative for EVs. But on the flip side, if he gets elected, we know that BYD is definitely, and no Chinese automaker is entering the US market. He would put 100% tariff on these vehicles, even if they were made in Mexico. At least that's what he said. On the flip side, it doesn't seem that the current administration is happy with Chinese EVs coming to the US either. But the current administration maybe wouldn't go that far. Maybe all they would do is just make sure that the Chinese automakers cannot access the local incentives, the federal incentives of $7,500 per EV, and then the battery incentives. I'm not so sure that they would put incredibly high tariffs on EVs from China. Maybe they would, but I don't think it's nowhere near as likely as what Trump would do. Anyway, considering all of this, Gary Black thinks that Tesla stock is going to $250. Considering all of the negative catalysts, and considering the negative possible delivery growth, I would not be too surprised if the stock took a big dump and fell down temporarily for some time. And I think just psychologically, let's say it goes to 100. Would it go below 100? I think psychologically that 100 number is where a lot of investors are thinking, okay, if it goes down to $100, I'm going to mortgage my house. I'm going to sell all of my other assets. I'm going to go all in into Tesla stock. And I have seen some of the Tesla stock investors about a year ago when Tesla was close to $100. Selling homes, using loans to buy a lot more Tesla stock, and it paid off big time for them. And I think that reinforces them to do the same thing again. And many of them, the last time, started buying around 140 and 120, and especially around $110 per share. But there was one major difference back then. If Elon Musk did not sell as much Tesla stock as he did back then, I don't think the stock would have fallen nowhere near as much. And if you remember the call with Elon Musk on X Spaces from a little bit over a year ago, he said that in 2023, he's definitely not selling any Tesla stock. And that a year after that, so 2024, probably he's basically not selling Tesla stock. He did not say for sure he's not selling Tesla stock, but he said probably not. Now, if all of a sudden Elon Musk starts selling Tesla stock, yeah, I think the stock going down a lot more is very possible. And here's something people are not talking about. Elon Musk needs $6 billion for XAI. This is from January 2024. Now, Elon Musk denied the reports that he is trying to raise money for XAI, but we have often see rumors. Sometimes Elon Musk sort of denies them. Sometimes he just sort of plays a game, and he uses specific wording that doesn't really deny the allegation, but makes it look like he's denying the rumor. So not the allegation, the rumor. So Financial Times says he's trying to raise money, but Elon denied that he was fundraising. And I would much rather prefer him say, yes, I am fundraising, because if he is not, where is he raising the money from? His Tesla stock holdings? Maybe. So I wanted to make this video with a bit of a warning, saying that Elon Musk could possibly sell Tesla stock, even though he doesn't need money for X or Twitter, really. He might need some of that money for XAI, but supposedly he's only looking for $6 billion. And if you remember, Elon Musk sold a lot more Tesla stock than that when he was selling for about a year. And probably he would raise money from some other sources as well. If he sells Tesla stock, I don't think that will be the only source for him to fund XAI. But if Elon sells Tesla stock, would Tesla stock drop by maybe about 10%? I think so. I think that's very likely. It would also create some negative momentum for Tesla stock potentially to drop further. And perhaps if he doesn't just sell Tesla stock that one time and he wants to sell again, that would create momentum for the shorts to short Tesla stock, which then creates this negative momentum, making the stock go down even further just because people are shorting it. And then some people would also get margin called, although I don't think the risk for people getting margin called is as high as it was before, because I think a lot of these people have been margin called the last time Tesla stock went down to $100. And by the way, like I said before, many times, don't use margin. If you use it, okay, that's fine, but I don't encourage it. I strongly encourage against using margin loans to buy more Tesla stock. If you want to know how come I sleep so well at night? Even when Tesla stock drops by a lot, it's because I don't have any margin loans. Now, if Tesla stock starts dropping, how much will it drop? Well, if it drops 30% below this moving average that I have set to 365 here, and 30% below $209.08 is $146. So if Tesla stock drops all the way down to that number, roughly $140, I would not be surprised at all. And I would actually expect it to drop even more than that, because if you look back, it has dropped quite a bit more than that. But historically speaking, if you look back at the last 10 years, or from the moment Tesla stock IPO'd, it has generally always been a very good idea to buy Tesla stock once it drops 30% below that moving average, which right now would be about $146. And if anyone asks me, I have a lump sum of money, I really like Tesla stock, but I want to minimize my chances of losing money. But at the same time, if it goes up a lot, okay, I missed out on it. I don't really care much about it. I just want to get into Tesla stock at the best possible time. I would say, okay, just wait until it drops 30% below that moving average. And if it does happen, then get in. If it doesn't, then you have missed out. But if it drops below that line, then I think your chances of losing money, even in the short term, are much, much, much lower. Just remember, if there's a big catalyst that materializes, the stock doesn't come below that line until the massive rally is basically done. So it's a risky strategy if you really believe in the company's potential. Now, if Tesla stock keeps dropping, and if it drops all the way down to, let's say, $100, I will be buying all the way down there. My name is Matt Poches. Thank you so much for watching, and I will see you in the next episode.